Hi friends, Namaste. You are watching Investors Time and this is Sahabir. You are in a channel where companies' numbers are put in front of you in the form of pictorial representations and it's up to you if you want to choose this company or not. But mostly we will pick such as stocks where there is a little growth potential or the company is going to turn around either technically or fundamentally. So in this video, we will be talking about a company whose sales is growing at 18% currently. And if you see its average of 3 years, it is just 3%, and in the last 7 years, it was just 11.66%. So now the present growth is very enormous, and even operating profit margins are at historical highs at 14.12%, while its last 7 years was just 10.76%. And there is also one more thing that this company is trying to expand its footprint into acetone and phenol also through its subsidiaries. But for now, you have to know that phenol and acetone, their market demand in India is like 3.5 lakh metric ton per annum of phenol and 1.8 lakh metric ton per annum of acetone. This is a sector growing at 10 to 12% annually. And India has been importing and there was no domestic supply of this acetone and phenol, but Deepak Nitrite, through its 100% owned subsidiary, which is Deepak Phenolics, it has actually started expanding its Dahej plant in order to produce acetone and phenol. And through that, it is going to cater about 60% of the India's market demand for phenol by Deepak Phenolics. And when it comes to acetone, 67% of the India's market demand is estimated that it will be met by Deepak Phenolics. And even if we have to speak about the chemical sector, India's chemical industry is actually projected to double by 2025 to almost a size of $300 billion, which is actually growing annually at 10% rate. And in that, specialty and agrochemical sectors will lead the pace. And even if you see its GDP ratio, its share in manufacturing sector of GDP is about 16%, and the government has actually targeted to increase it to 25% by 2025. And even if you see the acetone and the phenol sector, these two products actually cater to more than 20 end-use segments which are directly linked to the growth of India's GDP. So we will be talking about Deepak Nitrite, and in this we will do the KYC, know your company, and then we will get into the technicals, which is most of the favorite part, and then we will see the overview where we will cover debt, cash flows, returns, and then we will look into quarterly results, which will be our main criteria, and then revenue distribution and also shareholding and valuations of the company. Finally, we will look into the yearly performance, then we will end this project with pros and cons. So basically, this Deepak Nitrite is a chemical intermediate manufacturing company, and it has 5 state-of-the-art manufacturing plants, 2 in Gujarat and 2 in Maharashtra and 1 in Hyderabad, and 1 it is expanding in Dahej, Gujarat, in order to manufacture phenol and acetone. These intermediates are used in several diverse end applications. It is used in pharmaceuticals, agro, and several other things. You can pause it and see. And these are the major clients that it caters to. If you look into the product portfolio, basically it can be divided into 3 segments, which is basic chemicals, fine and specialty chemicals, FSC, and performance products. And this is a market leader for organic intermediates, nitrotoluenes, xylidins, cumidins, and oximes in India. And it also has a 70% market share in sodium nitrite, sodium nitrate, and nitrotoluenes in India. And there are also new launches that are coming up in agrochemicals, pharmaceuticals, and also wood preservatives. And if you look into its turnover, domestic contribution is almost about 65%, while exports is about 35%. And in exports, Europe is contributing more at 46%, while Asia is contributing 30%, US is contributing 16%. So acetone and phenol is the main reason why we are talking about this company. Till now, those numbers are not reflected in any of the results of the company. From now, the next quarter, they may be announcing the acetone and phenol numbers, due to which the profit growth might increase, and that might give a boost to the company price. And that's the reason why we are looking into this company. Through its wholly owned subsidiary, Deepak Phenolics Limited, it already has made a progress and it already has started manufacturing acetone and phenol. Its capacity is about 2 lakh metric ton per annum of phenol and 1.2 lakh metric ton of co-product acetone. They will be also manufacturing 2,60,000 MTPA of cumin. Cumin is nothing but it's a feedstock to manufacture phenol and acetone. And if we have to put this acetone and phenol demand of India, you see the last 4 years of numbers, the import volume for phenol has gone from 2.2 lakh to 2.9 lakh from 2013-14 to 2017-18. And even if you see the acetone, they have increased from 1.16 lakhs to 1.5 lakhs in the same period. So this is being catered by this company, and that will be a huge growth potential for this company. And after acetone and phenol, the company is also planning to develop the downstream products. Let's look into everyone's favorite part, which is technicals. So this is the Deepak Nitrite's daily chart. I have used Heikin-Ashi candles in this and Ichimoku, pivot points, and RSI and MACD. Let's start with a top-down approach where we will start from weekly charts. And from this weekly charts, we can actually deduce that the RSI has actually entered into a strong 60 levels. This is not an oversold or overbought zones, please. It is a strength index. So from 60 levels, there is a huge potential that the stock can actually move up. If you want to see in the history also, you can see here, once the stock comes up into the 60 levels, then the stock actually boomed. It has become a multi-bagger. And you can see here also, then the stock started moving up. That's the reason I'm saying this is not an overbought zone. This is 60 level is a high strength index where the stock has a potential to go up. So let's look into the daily charts if there is any retracement chances. Yes, you can see here and also here. The momentum on upside has actually halted. And even from the Ichimoku, there is one important thing that you have to notice if at all you are doing some other analysis for some other stocks. Once it comes down the cloud will act as a strong resistance everywhere. Here also it has acted as a resistance. And once the cloud breaks and get into the cloud, that is a time when you have to tighten up your seatbelts and you have to get ready to pick the stock. Even if it actually breaks the cloud, I actually look for a test of support, but it didn't give a chance here. And there is also one more way where we can actually pick the stock. We can use the divergence of MACD. MACD is not about crossovers. It is mainly about the divergence, and that is where the name has come up. If you forget, just forget the crossovers, because every crossover will actually dump you. But you can see in the ranging market, the MACD has been actually going up. There was a zero line rejections here 2 times, but the stock actually didn't fall well below the ranging market support line. And finally, near the zero line with histograms being positive, once it gave a strength candle, and from then the stock started moving up. Since the upside momentum has actually stopped, it has halted. There are high likely chances that it might fall to 252 levels, which will be a safe zone to enter for a target of 300 rupees or something. But even then, even if it is approaching 300 levels or 280 levels, we have to see if the momentum is on or if it is being halted. Or there is one more way that we can actually pick this stock. Go into a hourly chart and see if there is any zero line rejections of MACD lines. This is a zero line rejection where you can actually pick this stock. Once the stock has moved up, and if it is very far from the cloud, there will be high likely chances that there will be an extended retracement where the stock price will come towards the cloud and then starts to move. And at the same time, if there is a zero line rejection of MACD, that is a time where you can actually pick this stock, and that will be a safer levels to enter actually. And there is a high likely chance of another zero line rejection, but we have to wait till histogram becomes positive here, and then you can pick the stock, or you can wait till the stock falls to 250 to 260 levels. Until it gives another bearish signal like rejections at the top or like a weekly pivot lines or something, you can actually hold this stock. We will just look into overview of the company. This is incorporated in 1970 and works on chemical sector, and this is a mid-cap company with 3,700 crores of market cap at a price of 271 rupees. More than in market cap, it's more important to see market cap per sales ratio, which is at 2.18, which is optimal. If it is less than 3, that is fine. And earnings per share, it is at a trailing earnings per share, which is like 7.4 levels. Even if you see P by E ratio, it is actually at a little higher levels than industry average. Current PE ratio is at 36.37 while industry average is 22. Book value stands at 71, where you get P by B ratio of 3.81. They have not pledged any shares. If you look into the balance sheet of this company, the reserves have been growing in the last decade from almost 179 crores to 916 crores. It has an enormous growth. And if you see borrowings from 2011 to 2015, they have enormously borrowed money. In 2015, which was 544 crores, it has reduced to 461 crores in March 2018. Inventory turnover is very bad. It has been actually in a decreasing trend. It has dropped from 12.37 in 2015 to 7.66 in 2018. Even the debtor days, it has increased and at flat levels at 93, 92 levels. And now let's talk about the debt of the company. The debt to equity stands at 1.07 levels, which is optimal levels. And if you see current ratio, it is standing at 0.95, which is not bad. And if you see the right side columns, it is a quarterly interest payment and yearly interest payment. In December quarter, it stood at 10.35 interest payment, while in September it was about 11.68. But even if you add the average of last 3 quarters, which is like 10 crores, then it comes again to 42 level, which means that even in the present year, financial year 2019, the borrowings have not come down. And at present levels, debt to equity has dropped from 1 level to 0.49, which is a mouth-watering level. And the current ratio also has actually increased to 1.8 from 0.95. The interest coverage ratio is so at 4.55% levels. And now we will see the net cash flows. Operating activity cash flows are doing good at 214 crores, but investing activity and financing activity is negatives, and that's where the net cash flows results to a 0 levels. And we will see the returns of the company. Return on equity has actually dropped to 9%, which was 15% in 2017, while return on capital employed has actually increased from 6% to 13% presently. And return on assets also has actually halved from 6.26 to 3.61 levels till March 2018. And now the return on equity has improved by 100 basis points, like 10.11 levels. Return on capital employed stands flat at 12.23. Return on asset has gone up to the previous levels of 6, which is good. Now coming to the dividend ratios, dividend payout ratio has actually increased to 21 levels. They have come to their normal levels of 21%, which means that the company doesn't need more money, and whatever net profit is there, they are ready to distribute to the shareholders of the company. And even you see dividend yields, they have actually dropped down. They have not been paying proper dividends, but we hope that once the plant picks up, they'll start paying dividends of previous levels, which were like above 20%. So let's see the quarterly performance of the company. This slide gives an overall picture of the whole company's performance. The sales growth has been growing at 4.5% in December 2018 quarter, which was at 2.8%, but there were levels which were like 7%, 6% before. Operating profit margins have actually improved if you compare the last 5 quarters, but it has dropped from September quarter by 100 basis points. And net profit margins are at historic highs at 7%, wherein the average was just 5% before. And if you see the sales growth, yearly it has grown by 21%. And if we add up the last 3 quarters of this present year and make a 9-month to 9-month comparison, then it grew by 23%. And if you take an average number from the last 3 quarters, it has been doing a sales of 420 to 450 levels. So take it as a 420 crores of sales. And if you add up with this 9 months, which is 1,300 crores, then it comes to 1,720 crores, which is almost with the same levels of trailing number, which is 1,698 crores. And we will see into the profit growth. The blue bars, which are other income, this has been not good in March 2018 and December 2018. Let's talk about this quarter, where other income stood at 5.49, wherein we got net profit of 31.62. If we had not got this other income, then it would have been the same levels of 28 or maybe less than that compared to the previous quarter. It has grown on a quarter-on-quarter basis of 12%, while the yearly growth was huge at 55%, which is good. If we make a 9-month to 9-month comparison, it has grown by 29%, and we are expecting a 101 crores of net profit. And if you take an average profit in the last 3 quarters, which is almost like 25 crores, and if you add up to this 81 crores, then it almost comes to 105 crores or 100 crores. Then that is also at par levels of what we are expecting in this financial year 2019. EPS growth has been about 12.62% on a quarter-on-quarter basis, and on 9-month to 9-month comparison, it grew by 24%. Let's talk about revenue distribution of this company. There were 3 segments, as we talked already. The first one is basic chemicals. This is usually moderate margin, high volume products, and it has a sensitivity for prices and also high dependence on sustainable raw material availability and also plant utilization. This segment enjoys a entry barrier because of high cost of putting up large scale operations, but requires an efficient chemical process and logistics management. And going forward, this company's basic chemicals business is expected to remain very strong due to demand supply disruptions and also a projected capacity closures in China. And you can see that the revenue growth has been 8% quarter on quarter and 13.5% year on year. And if you talk about the segment's PBIT, the quarter on quarter was actually negative 6%, but it grew by 19% on year basis. And if we talk about fine and specialty chemical revenues, this is a high margin segment. At present, the contribution of FSC business to the top line is almost close to 31%, and the company is expecting that it will actually improve. This segment's value is actually tied up with the long-term strategic relationships with few customers and is less affected by raw material prices, but requires very stringent monitoring of quality and timely supply. And if we look into the China's capacity rationalization and also coupled with growing demand from consumer facing industries and the importance of maintaining cost effective production, the Indian F&SC segment is poised for multi-fold growth in the coming years. This FSC revenue has grown by 3% quarter on quarter and has grown 21% year on year. When it comes to PBIT, there was a negative growth of 8% quarter on quarter, but it grew by 26% year on year. And the last segment, which is performance products, these products have actually stringent requirements in terms of performance as desired. This company is fully integrated manufacturer of optical brighteners, OBAs, which is a backward integrated up to the feedstock of toluene. So in this segment, this company caters to 75% of the domestic requirement of brighteners and has expanded its footprint internationally as well. So this segment has grown by 2.8% quarter on quarter, but year on year it has shown a growth of 47%. And when it comes to PBIT, there was an enormous growth, and quarter on quarter it has grown by 27%, while on year it has grown by 1500% of PBIT. So let's talk something about shareholding pattern. You can just pause and you can see that the promoters are holding about 44% and NBFC mutual funds are holding 14%. Foreign institutions have 10.66%, resultant 20% are with general public. So this is one slide where I show you insider trades. You can see that from March 2019, there has been a buying in the market from even the board members, insider trades at a price of 233 levels. And that is what we talked even in the technicals that, 230 levels, which is a ranging resistance. After that, the stock has started moving up. And these are the mutual funds which have been holding, and you can see which mutual funds have actually increased their stake in the Q3. Let's talk about the valuations of the company. Market cap per sales ratio has stood at 2.41 in March 2018 at a price of 257 rupees, and it has grown enormously, which means that the price also has actually grown. And the PEG ratio now currently stands at negative 1.52 levels. The P by B now stands at 3.68, which is actually at a historical highs. So the valuations actually look higher, but now we will look into the yearly performance of the company. The sales has actually grown by 18% in March 2018 with the operating profit margins of 14%, which is the historical highs in the last decade. And even if you see the net profit margins, they have actually fallen to 5.74 levels from the previous 2017 of 8%. But we have already seen in the quarterly growth that, the net profit margins have actually improved to 5, 6, 7% in the last 3 quarters. So on an average, we can think that the operating profit margins again started to improve to 7% or 6% levels. Coming to the sales number, we are expecting about 1,698 crores, which is a growth of 17%. Even in the 2018, it grew by 18%. The sales CAGR growth is about 9% in the last 3 years, while in the last 5 years, it stood at 14%. Coming to the profit, in March 2018, it did about 83 crores of net profit, which is a 25% degrowth. But in this year, we are expecting about 101 crores of net profit, which is a growth of 22%. The CAGR growth for the last 3 years has been at 28%, while in the last 5 years, it stood at 117%. Coming to the EPS, it did a 6.12 EPS in March 2018, and we are expecting about 7.46 levels of EPS in 2019, which is a growth of 22%. And finally, we will list pros and cons of this company. The shareholders have not pledged anything, which is a positive news, and its product portfolio and global footprint is definitely a positive factor for this. And all its flagship products are actually import substitutes, which is a very positive factor for this company. Coming to the cons, increased volatility in prices and also availability of raw materials will actually affect this company. Since it is an export-oriented company, currency fluctuations will actually affect this company's performance. Thank you guys. Thank you for your patience. I hope you like this presentation, and if you like this video or this company, please punch the like button and also share with your friends, and please don't forget to subscribe to the channel. Thank you. Happy investing. Stay healthy.